You know, there comes a time in every trader's life when the market humbles him. I don't care how clever you think you are, how good your system looks, or how many winning trades you've had. The market has a way of teaching lessons you can't learn from any book. Today, we're going to talk about that turning point, from blowing accounts to finally making money. If you watched the previous video on dangerous illusion of easy trading, then you already know how seductive this game can be when you first step in. Now, it's time to face the part nobody likes to talk about. The long, painful road to consistency. You see, in my early days, I blew through more accounts than I care to admit. Each time, I told myself the same thing: next time will be different. But it never was. Because the problem wasn't the market. It was me. Have you ever felt that sting when you stare at your screen and realize you didn't lose because the setup failed? You lost because you couldn't follow your own plan? That, my friend, is the real cost of learning this game. Most traders think they need a better strategy. What they really need is better judgment. A chart will tell you everything you need to know if you know how to read it. Price doesn't lie. People do. The tape will whisper its story, but only if you stop arguing with it. You can't fight the trend and win. I learned that the hard way, after watching good profits vanish because I thought I was smarter than the market. Tell me, how many times have you moved your stop loss just because you felt it would turn around? There's a reason most traders never make it past the first few years. It's not lack of intelligence. It's lack of discipline. When a man is losing, he wants to trade more. When he's winning, he becomes cautious. That's backwards, isn't it? But that's human nature. And trading punishes human nature every single time. I used to think I could outsmart that law, until the market taught me that survival comes before profit. You must protect your capital like a soldier guards his last bullet. Without ammunition, you can't fight another day. When you blow an account, it's not the money that hurts. It's your confidence. You start questioning everything. Your method, your timing, your worth. But here's the truth: every blown account was tuition. You were paying for experience. The only real mistake is refusing to learn what the market was trying to tell you. Think about it. What if those losses weren't failures, but the price of admission to understanding the truth behind price action? And that's the truth I had to learn. No one can tell you how to trade. You can study the greats, copy their rules, memorize their setups, but the market will still test you until you develop your own conviction. When you finally reach that point, you stop chasing trades and start waiting for them. You stop gambling and start observing. You trade less, but you win more. Have you noticed how patience feels harder than clicking buy? That's why it's profitable. When I finally started making money, nothing changed on the charts. I changed. My mindset shifted from hunting profits to preserving opportunities. I realized my real job wasn't predicting what the market would do, but reacting correctly when it did it. Every chart is a story of human emotion: fear, greed, hope. And if you can read those emotions, you can read the market. Remember how we talked about the illusion of easy trading? That illusion blinds you to the fact that real trading is mostly waiting, observing, and doing nothing. Most people can't handle that kind of boredom. A professional trader doesn't chase excitement. He chases clarity. There's a rhythm to the market, just like in life. You have to wait for your pitch. You can't swing at every candle that flickers. I used to jump into every move I saw, thinking opportunity meant action. Now I know opportunity means preparation. Ask yourself, how many of your trades were born from impatience instead of analysis? The charts don't care about your feelings. They don't care about how hard you've studied or how much you've lost. They only respond to price and volume. The sooner you accept that, the sooner you can detach your ego from your trading decisions. That detachment, that calmness, is where real money is made. Once you stop forcing trades, the market begins to open itself up to you. Every successful trade begins long before the entry. It starts with observation, watching how price behaves near key levels, how volume confirms strength or weakness. I remember days when I'd watch a stock for hours, waiting for that one precise moment when it broke through resistance with conviction. That patience made me more money than any fancy indicator ever did. Do you ever find yourself afraid of missing out when the market moves without you? That fear is your enemy, not the missed trade. You can't control the market, but you can control yourself. That's where wealth is built. Not in the trades themselves, but in the trader's mind. The consistency you crave is not in the strategy, it's in your reactions. When I stopped overtrading, my account finally stopped bleeding. When I stopped guessing tops and bottoms, I started flowing with the trend. It wasn't about being right, it was about being aligned. And alignment comes from humility. The market rewards humility. The proud trader always tries to prove he's right. The wise trader only tries to survive. That's the turning point. The moment you stop trying to conquer the market and start respecting it. When I finally made that shift, I understood something crucial. Making money in trading isn't about being aggressive, it's about being selective. The fewer moves you make, the more deliberate they become. Sometimes I think back to those early days. The frustration, the sleepless nights, the losses. Funny thing is, I wouldn't trade them for anything. Those losses taught me discipline, and discipline taught me profit. It's a strange truth. The same pain that almost drove you out of the game becomes the foundation that keeps you in it. That's when you finally see that the market was never against you, it was shaping you. And maybe that's where most traders miss the point. They look for a secret formula, a magic setup, a shortcut to the promised land, but the only real secret is time, patience, and respect for the tape. Every tick tells a story. Every loss leaves a lesson. Every quiet market teaches patience. Remember, as I said before, that illusion of easy trading, it doesn't just fool beginners. It creeps back every time you start feeling comfortable. That's why you must always stay a student, no matter how profitable you become. Every blown account is tuition paid to the market. That's a hard truth, but it's one every real trader comes to understand sooner or later. You don't learn how to trade from profits. You learn from losses. Profits feed your ego, losses feed your experience. And in this business, experience is the only thing that keeps you alive when the market decides to test your nerve. The moment you lose money, you're paying for an education that no classroom can offer. The difference between a gambler and a trader is that the trader actually learns from the fee he pays. I've blown accounts, more than I care to count. Each one felt like a personal failure at the time. You sit there, staring at a zero balance, wondering how you could be so foolish. You replay the trades in your head, the hesitation, the greed, the missed stop loss. But here's the twist. Every one of those blown accounts taught me something I could never have learned in theory. Tell me, have you ever had that moment where a mistake sears itself into your memory so deeply that you know you'll never make it again? That's what a blown account does. It brands the lesson into you. You see, most traders come into the market thinking they'll skip the pain. They believe they can outsmart the process. That somehow they'll study a few strategies, follow a few gurus, and jump straight to the profit stage. That's the illusion we talked about in the previous video, the dangerous illusion of easy trading. But the market doesn't sell shortcuts. It sells lessons, and those lessons are priced in dollars, emotions, and time. When you lose, the market isn't punishing you, it's billing you. The question is, will you learn enough from that payment to avoid being charged again? When you blow an account, your ego takes the first hit. You realize that knowledge and wisdom are two very different things. Knowledge is reading about risk management. Wisdom is feeling the sting of not using it. The market teaches by pain, because pain sticks. And that's why most traders never grow. They hide from pain instead of studying it. If you look closely at your losses, you'll see patterns. You'll notice the same mistakes repeating. Over-leveraging, ignoring signals, chasing late entries, trading boredom instead of setups. Those aren't random errors. They're habits demanding correction. Every dollar lost has a story attached to it. Sometimes it's the story of impatience. You entered too soon before confirmation. Sometimes it's arrogance. You refused to cut a loser. Sometimes it's fear. You closed a winner too early. Each one of those stories holds a message, if you're humble enough to listen. But most traders never do. They simply reload their accounts and promise to do better, without understanding what better even means. They want revenge instead of reflection, and that's why they keep paying tuition to the same teacher over and over again. A blown account doesn't mean you're finished. It means you've been shown the real rules of the game. The market doesn't care how much you want to succeed. It only cares whether you've developed the discipline to survive. Losing money hurts, but that pain becomes your compass if you let it. You start to sense danger earlier, feel hesitation in your gut before disaster strikes. Have you noticed how your instincts change after a big loss? That's not fear. That's awareness. That's your tuition turning into intuition. When I finally accepted that losses were part of the learning curve, everything shifted. I stopped treating them like enemies and started treating them like instructors. I began asking different questions, not, why did I lose? What did this loss expose about my behavior? Sometimes it exposed greed. Sometimes it exposed stubbornness. Sometimes it exposed a lack of preparation. Every time it showed me where I was weak. And once you know your weaknesses, you can finally start to trade from strength. Think about it. A doctor spends years in school, paying thousands in tuition to learn his craft. A lawyer studies, practices, and fails before ever winning a case. But traders, they expect to open an account and make a living immediately. The market doesn't work like that. It demands the same investment of time and failure, except the classroom is a chart and the tuition is real money. The sooner you accept the truth, the faster you grow. Some of the most successful traders I've ever met have the same story: early losses, deep lessons, and eventual mastery. The difference between them and the crowd wasn't talent, it was endurance. They didn't quit after paying their tuition. They stayed long enough to make use of it. Every blown account gave them a piece of understanding about risk, psychology, and timing. When they finally started making money, it wasn't luck. It was accumulated wisdom paid for with years of mistakes. And that's another thing. Most traders don't respect the cost of their education. They treat small losses as nuisances instead of study material. But every trade, win or lose, is data. Every loss is feedback. If you ignore it, you're wasting your tuition. If you analyze it, you're compounding your knowledge. It's that simple. The market doesn't owe you anything, but it offers everything to those who study its lessons with humility. A blown account teaches more than risk management. It teaches identity. It forces you to see whether you truly want this game or just the rewards it promises. When you've lost hard-earned money, when you've felt that burn deep in your gut, you start to realize whether you're built for this. Because this business isn't about excitement, it's about endurance. It's about the ability to get knocked down, study the tape, and step back in wiser, calmer, and quieter than before. You can't become a trader without paying that price. You can read all the books, follow all the signals, listen to all the advice. But until you've faced your own reflection after a loss, you haven't started learning. The market's lessons are expensive because they have real value. Once you've paid enough of them, you stop needing luck. You stop needing prediction. You begin to understand rhythm, probability, patience. You stop trading for thrills and start trading for clarity. So when you blow an account, don't curse the market. Don't call it unfair. Recognize it for what it is. Your tuition bill, handed to you by the greatest teacher in finance. The market teaches, but it never explains. It shows you the test first and the lesson later. And if you're smart, you'll keep showing up for class, because each time you pay that fee, you're buying a piece of wisdom that can't be taken back. Discipline matters more than strategy. It sounds simple, but it's the hardest truth for most traders to accept. Everyone is out there hunting for the perfect system, the magic indicator, the secret entry point that will make them rich. But I'll tell you something the market taught me through sweat and losses. The best strategy in the world is worthless if you can't follow it. You could hand two traders the same setup, the same chart, the same rules, and one will make money while the other loses it all. The difference isn't the strategy, it's the discipline behind it. When I started trading, I thought success was all about knowledge. I read every book I could find, studied charts day and night, memorized patterns, and backtested strategies until my eyes burned. But every time I broke my own rules, the market punished me. It wasn't because the method was bad. It was because I couldn't control myself. Have you ever had a plan to cut a loss at a certain point, only to move your stop just a little further, hoping the trade would turn around? That small act, that single lapse in discipline, has destroyed more accounts than bad analysis ever has. Discipline isn't glamorous. It's not exciting. It's the part of trading that feels boring, repetitive, and thankless. But it's the only thing that separates professionals from amateurs. A disciplined trader doesn't need to be right all the time. He just needs to follow his rules all the time. The amateur wants to win every trade. The professional wants to execute every trade correctly. That's a big difference. You can't control your outcomes in the market, but you can control your actions. And in trading, consistent actions create consistent results. Every undisciplined moment comes with a price tag. Maybe it's a small loss that could have been avoided. Maybe it's a large one that wipes out a week's worth of profits. Either way, the market collects its fee. I've learned that when I break discipline once, it becomes easier to do it again. One small rationalization turns into a habit. You start to think, it's just this one time, until it's every time. That's how traders drift from structured plans into chaos. Do you know that quiet voice that tells you to wait, to stick to your rules, but you ignore it because you think you see a quick opportunity? That's the voice that saves accounts, if you listen to it. Most traders lose not because they don't know what to do, but because they can't do what they know. You can have a simple strategy, buy breakouts, cut losses at 2%, risk 1% per trade, and still blow your account if you can't obey those limits. Discipline isn't about perfection. It's about control. It's about training yourself to do the right thing, especially when your emotions are screaming to do the opposite. The market preys on impatience. It feeds on greed and fear. The disciplined trader learns to recognize those emotions without obeying them. There's an old saying, the market will test your patience before it rewards your skill. That couldn't be more true. I used to jump into trades just to feel active, just to avoid the boredom of waiting. Most of those trades ended in regret. Later, I realized that doing nothing is often the most profitable move a trader can make. Waiting for confirmation, waiting for clean setups. That's where discipline lies. It's not about knowing when to act. It's about knowing when not to act. Have you noticed how hard it is to sit on your hands when the market moves without you? That's your test. The previous video on the dangerous illusion of easy trading ties into this perfectly. That illusion convinces traders that success is about fast action, about being constantly involved in the market. But real traders know the opposite is true. Success in trading comes from restraint, from having the discipline to stay out when conditions aren't right. The market rewards those who wait for high probability moments, not those who chase every flicker on the chart. Discipline is what allows you to stay patient when everyone else is panicking or rushing in. Discipline also means respecting risk. Too many traders think risk management is optional, something you apply only when you feel uncertain. But discipline means it's automatic. You don't think about it. You follow it like breathing. You size your positions according to your plan, not your confidence. You cut losses without hesitation. You don't double down on a losing trade because you know it'll come back. The disciplined trader understands that protecting capital is more important than proving he's right. Every undisciplined trader eventually learns that, but usually after the market takes his money. And here's something most traders never realize: discipline is freedom. It might sound like a contradiction, but it's true. When you have rules and stick to them, you free yourself from doubt and second guessing. You don't need to rely on emotion because you already know what to do. You act, you execute, you move on. The market's uncertainty no longer controls you because you've learned to control yourself. Have you ever noticed how calm trading becomes once you stop trying to outsmart your own system? That calmness is the reward of discipline. It's easy to be disciplined on a good day, when the trades are clean and the profits are flowing. The real test comes when nothing seems to work, when you've taken a few losses in a row and you start to question your edge. That's when discipline matters most. The undisciplined trader tries to make it back fast. He increases position size, takes impulsive trades, chases volatility. The disciplined trader steps back, reduces exposure, waits for clarity. That patience feels painful in the moment, but it's what preserves longevity. In the end, trading isn't about making one great trade, it's about surviving long enough to make thousands of them. I've seen traders with brilliant systems lose everything because they couldn't control themselves. I've also seen traders with the simplest setups make steady money year after year because they followed their rules religiously. The strategy gives you a plan. Discipline gives you consistency. Without it, every system fails. That's why I say discipline matters more than strategy, because a trader without discipline will destroy any system, while a trader with discipline can make almost any reasonable system work. It's not the method that makes the man. It's the man that makes the method. And until you learn to master yourself, the market will keep reminding you who's really in control. True trading skill is reacting, not predicting. That's something you come to understand only after years of mistakes, frustration, and false confidence. When I first started, I thought the key to making money was knowing what the market would do next. I spent endless nights trying to forecast every move, drawing lines, studying indicators, reading news, anything that could give me a clue about tomorrow's price. I wanted to be right. Every trader does in the beginning. But the market isn't about being right. It's about being ready. The difference between a beginner and a professional is that the beginner predicts while the professional reacts. The market doesn't reward fortune tellers. It rewards observers. Prices move because of pressure. Buying pressure, selling pressure, emotion, greed, and fear. You can't control or predict any of that, but you can recognize it. A real trader watches, not guesses. He waits for confirmation before acting, and when he acts, he commits without hesitation. Have you ever noticed how the market seems to move in the exact opposite direction right after you enter a trade? That's because you're predicting. You're trying to force the market to align with your opinion, instead of waiting for the market to reveal its direction. There's a rhythm to price movement. It's not random, but it's not predictable either. It moves in waves of demand and supply, in the push and pull of human behavior. You can study those rhythms, you can prepare for them, but you can't command them. The moment you stop trying to predict the next candle and start responding to what's already there, your entire perspective shifts. You stop fighting the market and start flowing with it. You realize that the tape, the raw action of price, is the only truth that matters. Every great trader I've ever met had one thing in common: they didn't need to know the future to make money. They only needed to recognize when the market had shown its hand. You can call it reading momentum, you can call it price action, but at the heart of it, it's reaction. It's waiting for confirmation that the market agrees with your bias before committing your capital. That's where trading skill lives, not in the prediction, but in the precision of your response. When you're trying to predict, you trade emotionally. You want to be proven right. You hold losing trades because your ego can't accept being wrong. You average down, hoping the market will turn to validate your forecast. But when you react instead of predict, the ego disappears. You stop needing to be right, you start needing to be effective. You enter only when the market shows alignment, and you exit when it tells you the move is over. There's no pride in that, only precision. And precision, not pride, builds wealth. Back when I was learning, I used to think I could see the top or the bottom of a move. I'd convince myself that the market was due for a reversal, only to watch it keep climbing or falling without mercy. I wasn't trading the market. I was trading my imagination. It took many losses to realize that price doesn't care about my opinions. The market doesn't know who I am, and it doesn't owe me a reversal just because I think one should happen. Have you ever been in that position where you argue with the chart instead of listening to it? That argument costs money every time. In the previous video on dangerous illusion of easy trading, we talked about how beginners believe the market is something to be conquered. They think mastery means always knowing what comes next. But in truth, mastery means surrendering that illusion. The market can't be controlled or forecasted. It can only be understood in motion. True skill lies in waiting for evidence, not expectation. It's the difference between reacting to what is and guessing at what might be. The first builds discipline, the second builds delusion. Reacting doesn't mean being passive. It means being prepared. You study the chart, define your levels, plan your trades, and then you wait for the market to confirm your thesis. When it does, you act decisively. You don't hesitate, because you've already done the thinking. You're not reacting emotionally, you're reacting intelligently. That's what separates a professional from a gambler. The gambler acts on impulse, chasing every flicker of movement. The professional reacts to structure, to signals, to the story the market is telling through price and volume. There's freedom in reaction. When you stop predicting, you stop fighting yourself. You stop needing the market to behave a certain way. You begin to accept that uncertainty is normal. The best traders live in uncertainty comfortably. They don't need to know what will happen. They just need to know what they'll do when it does. That's true skill, not in the forecast, but in the response. Have you ever noticed how your stress drops the moment you start focusing on your reaction instead of the market's behavior? That calmness is a sign you're finally trading the right way. When you think about it, prediction is ego and reaction is humility. The ego wants to be right, humility wants to adapt. The ego fights the trend, humility follows it. The ego demands certainty, humility accepts probability. And the market always sides with humility. Every loss I ever took because of prediction came from pride. From thinking I knew something the chart didn't. Every profit I ever made came from patience. From waiting until the market made the first move and then stepping in behind it. That's why charts are so revealing. They don't tell you the future, but they tell you what's happening right now. Support, resistance, volume spikes, breakouts. These are not predictions. They're reactions waiting to happen. You don't need to know if the market will go up or down. You just need to know what to do when it does. Trading becomes mechanical, systematic, unemotional. You follow price, not opinions. You follow strength, not hope. The best trades are the ones where the market confirms your idea before you act. You wait for the breakout, not anticipate it. You wait for the rejection, not assume it. You react to facts, not forecasts. Over time, this builds a kind of instinct, not the kind born from guessing, but from observing the same patterns over and over until they're etched into your nerves. The longer you trade this way, the more natural it feels to let the market lead and yourself follow. When you reach that point, trading stops being a battle of wits and becomes a conversation. The market speaks, and you respond. That's the entire game. The amateurs are always shouting their opinions into the noise. The professionals are listening, waiting for the market to whisper something worth acting on. Reaction is the language of survival in this business, and once you learn to speak it fluently, you stop chasing the future and start mastering the present. Consistency begins with self-control, not indicators. Every trader wants consistency. That steady curve upward on the equity chart, that feeling of control over chaos. But most traders go looking for it in the wrong place. They think consistency comes from finding the right strategy, the perfect indicator, or the next new setup. What they don't realize is that the market doesn't give consistency to anyone. You bring it with you. It's a reflection of your own behavior, your patience, your discipline, your ability to manage yourself under pressure. You can't get consistent results from inconsistent actions, and the root of every inconsistent action in trading is a lack of self-control. When I first started trading, I believed that the key was in the charts, that if I just studied enough technical setups, I'd find one that worked every time. I kept changing systems, tweaking parameters, adding indicators, removing them, trying to filter out the noise. But the noise wasn't on the screen. It was in my head. I could have had the most reliable strategy in the world and still lost money because I couldn't control my impulses. Have you ever told yourself you'd wait for confirmation, only to jump in early because you didn't want to miss the move? That's not a system failure. That's a self-control failure. The truth is, the market rewards those who can sit still as much as those who can act decisively. It's a strange paradox. Doing nothing often makes you more money than trading constantly. But self-control is rare because it's uncomfortable. It feels unnatural to watch opportunities go by. Most traders would rather be in a trade, even a bad one, than sitting on the sidelines waiting for the perfect setup. I used to think that being active meant being productive. Now I know that every undisciplined trade I took was just me trying to escape boredom.